The FOMC's two-day meeting underway and a 75-point basis hike all but certain for tomorrow. Attention already turning to the Fed's next meeting on December 14th and whether or not inflation has decelerated enough to justify a smaller move, even just a quarter point. Our next guest has been nominated for a Pulitzer Prize for his work covering the Fed and is out with a new book on the former Fed chair and current Treasury Secretary Janet Yellen. Nice to have Jon Hilsenrath, Jim, apparently, senior writer for the Wall Street Journal, in studio with us.
I've
Good
been
to see
called
you,
much
sir.
worse.
Yeah, believe me, today probably, right? Good to see you, man. So let's
look on Twitter.
no better barometer.
Exactly.
So let's talk about tomorrow's meeting. All but certain, as we mentioned there, 75-point hike. What's your biggest question about what we'll hear from Jerome Powell?
Well, I think so. He's kind of opened the door to slowing down the pace of rate increases. And the question is, does he open the door?
How does he open the door?
Well, he said, if we see clear and convincing evidence that inflation is slowing, then we'll consider it. So the question is whether in the meeting itself, they've started to talk about that. Frankly, I actually think the really important moment isn't tomorrow. It's not the Fed meeting. It's next Thursday. Because next Thursday is when the CPI inflation numbers come out. Mm-hmm. And he said they want to see clear and convincing evidence. So that's when you look for the clear and convincing evidence.
Do you think they have seen it?
No.
Okay.
No, I think that they've been disappointed. I think they were starting to see some signs of it this summer. And the last couple of readings in these CPI reports were very disappointing. Yeah.
So, John, what about some of these issues or concerns that people have that the Fed isn't taking enough time for things to digest and be reflected in the real economy?
I think that's a totally fair and legitimate question. And it's surprising to me that you don't hear more of that coming out of the Federal Open Market Committee itself. There's a lot of very independent-minded Federal Reserve Bank presidents who you would think some of them would say at this point, all right, we've done a lot. Let's slow things down and see how it's doing. But, Jerome Powell has the Fed really moving in the direction that he wants, and that's to move very aggressively. I think one of the real concerns is that there's a lot of momentum that you get behind Fed decisions. When they do 0.75 of a percentage point, it's hard to get off that because if they slow down, then everyone says, oh, they're going to stop. And if they stop, everyone says, oh, they're going to cut rates. The market is always 2 steps ahead of them. So the Fed is kind of stuck in this path of continuing to do what they're doing. Or else, because they're afraid that the market's going to get ahead of them.
And John, just taking a step back, just your assessment of the economy right now, because when you take a look at the latest GDP report, when you take a look at the jobs data that we got out this morning, job openings, every single thing or most data points still point to the fact that it is a very resilient economy. Yet there is this fear out there that we are going to slip into a recession. Where do you stand on that debate?
Well, we got a good GDP report a week or so ago, 2.6% in the third quarter, and it contracted in the first half of the year. The worry is that, that's the best we're going to get this year. We're seeing a big slowdown in housing. We're seeing consumer spending slow down. The rest of the world is looking very weak. So I think and the economists that we survey every quarter are saying recession in 2023. So I think that's a real risk. And I think the Fed has kind of potentially created a momentum behind all these rate increases that they're having a hard time scaling back, which is why they're going to be praying on Wednesday night, next Wednesday, not this Wednesday, that those inflation numbers start to soften because, they probably would like to slow this thing down at this point, but they lose credibility if they do it before the inflation numbers tail off a little bit.
So, John, when you think of the conversations behind the scene, when you do have these periods before the Fed makes an announcement like this, especially as you've studied how Janet Yellen has moved and the family dynamic that came into sort of the policy making there, give us some insight into sort of the conversations that might be happening right now.
Well, I think the most important thing you have to think about when you're watching the Fed, and the market is always watching the Fed, is it's a very glacially moving institution. Unless there's an actual crisis in their face when they can do things overnight, they tend to take months and months and months to move the ship in a new direction, which is why they were behind the curve on raising rates to begin with, because it took them too long to say, oh, wow, we're out over our skis. We kept rates too low for too long. And they might be running into the same problem now on the back end of this, that they're going to want to see clear and convincing evidence, that's Jay Powell's terms, before they slow the pace of rate increases. Well, by the time they've slowed it down and stopped it, we might already be in a recession. So, what I would say about the debate is it's very slow moving. And I always try to kind of look at just kind of incremental changes. There's somebody new in there saying, well, what about this or what about that? And so I haven't done these press conferences in a while. If I were doing it, I would want to know, well, how did the debate change? Not what did you do today, but what did you start talking about that we might see in the next meeting or two in December or January?
So let's bottom line it. Goldman has 75, 50, 25, and 25 again in March. Do you agree with that consensus?
Oh, you know what? I don't know.
You don't do that.
That's the answer. I mean, I think, I'd kind of rather talk about kind of risks and stuff like that. And I think there's a risk that they're going too far and that they've moved too fast too far. And the risk, I think, is to the financial system. So, the economy has been growing, very fast and needs to slow down, and I understand all that. But when the Fed raises rates aggressively, even when it raises rates slowly, stuff tends to break in financial markets. And so, what I wonder about is what's breaking out there right now that we might be learning about in 1, 3, 6 months. And so, we might find out about it. We have to see inflation slow down. That's been the bottom line all year. And it just hasn't happened, which is disappointing, I think, for every American right now.
It is disappointing. It certainly caught Treasury Secretary Janet Yellen off guard, I think, a bit, just in terms of how sticky this inflation has been. I know you had a number of conversations. We have your new book here on set. Congratulations.
Thank you for holding that up.
Of course.
I've got your bottle of champagne under my chair.
There you go. We'll crack it open for you. But I guess your takeaway from the biggest lessons that maybe she has learned in her more than 2 decades in Washington, and then also pointing to the fact that there have been some rumors that she could be stepping aside as Treasury Secretary following the midterms. Your thoughts on that? And I guess who could potentially be the next Treasury Secretary?
Right. So let me take the last question first. So I asked her about this just a week and a half, 2 weeks ago. And she said to me very emphatically, she does not intend to leave the job. And that she likes doing it. She thinks it's important. She could see herself staying there for 4 years. Given the fact that these rumors have been going around, I doubt she would have said that unless A, she had really thought it through, and B, unless she knew she was talking to the Wall Street Journal. I don't think she would have said it unless she had told the White House she was going to say it. So when she says she plans to stick around after the midterms, I believe her. Right now there's a lot of rumors out there, but you never know where they're coming from. They just kind of float around in Washington, and sometimes, and they get repeated. When the person who the rumors are about says, I don't intend to leave very publicly, I don't know. Maybe I'll be caught off on this, but, I doubt she would have said it unless she believed it and she had told the White House she was going to say it.
And then the biggest lessons from the 20 years.
So, that's a big, long answer. I'll say 2 things. First of all, there's a lot of ideological debate in Washington and over the airwaves and, conservative policies, liberal policies, spend too much, tax too little. What I found is that in watching her career is that the big mistakes that have been made over the years, they haven't been ideological. It's been human error. It's been kind of misjudging where you are right now. So this inflation is a great example of it. So the federal government dumped money into the economy during COVID, in part because we had been through a decade of very low inflation, and they thought they could. And they were learning the lesson of the last expansion and applying it to this one. And they fought the last war, and they misread the situation, and now we have inflation. I would call it human error more than ideological error. And it boggles my mind because we debate ideological issues all the time, but it's really like, are you making the right, and this is what she said to me, you've got to look at the facts on the ground right now and read the environment. The other thing I'd say about Janet Yellen that kind of drew me to the story is, this is a woman in a very male-dominated field, a field that hasn't been very friendly, frankly, to women over the years. She broke every single glass ceiling in that field, and I think you can learn some lessons about the workplace, balancing work and family from her story. One of the great parts of the story that I focus on in the book, it's actually a love story. Yellen and her husband, the partnership that the two of them formed, him taking on full This guy won a Nobel Prize in economics, right? He took on full responsibilities at home, and she took on, equal responsibilities in the workplace. And the two of them together became the most powerful, influential couple in the economics industry by creating a partnership, equal partnership on both sides. It's a really interesting story.
Yeah, certainly a remarkable story. And like you said here in the title, Yellen, the trailblazing economist who navigated an era of upheaval. Jon Hilsenrath, great to have you on set. Thanks so much for joining us.
Yeah, that
here.
was fun. Thanks.